Good morning, everybody. We're live. We're about 8:20 Mountain Time, 10:20 on the East Coast. This is more the time that I want to do this most days, about somewhere in the neighborhood of an hour after the market has opened. Talk a little bit about what is moving the markets and what may or may not continue to move the markets throughout the day. Today, this has already been a little bit of a tumultuous day. Here we are. What is today? It's March the 22nd, last day of the month, not last day of the week. Weekly options expiration going on right now. And the Dow is down big time. Sorry, I'd been away from my streaming quotes long enough that it logged me off automatically. So my streaming quotes are coming back up so I can talk about it in a little more detail. As we speak right now, a little less than an hour after the U.S. markets open, we've got a situation where the Dow is down 192. It's been down over 250 points and has honestly had kind of a snapback just in the last 5-10 minutes. Just a few minutes ago, the Dow was down over 250 points, now down 189. Couple of things happening that are moving the markets this morning. I think it's three. I'm going to point to three things. Number one, I'm going to save this one for last. We'll talk about the yield curve, because that I think is having the biggest impact on investors and traders today. Is this convergence of the 3-month and the 10-year yield curve. The other thing is Nike. Nike reported earnings last night after the market closed. Nike had what people are referring to as a slight miss, meaning they didn't miss their numbers by a big, huge margin, but they missed their numbers. And most specifically, they missed some North American sales revenue numbers. That was disappointing. And then you've got this continued weakness and this continued concern over Boeing and what is going on with Boeing. They're not down as much today as they have been at some times in this past couple of weeks. But let's start with the news on Nike, because that was the biggest earnings miss. And again, the numbers didn't come in horrible, but Nike missed. And the primary concern for investors and traders is that North American sales were down from what analysts were expecting. And I heard. I wish I could give credit to the right person, because I was in my car. It was on the radio, and it was a guy being interviewed. I did not hear what his name was, but he mentioned that Nike is among a handful of retailers that are getting overconfident in their pricing, and his theory was, or his thesis was, that the economy has done so well for the last couple of years. And you can't deny the economy has done fantastic for the last couple of years. 2017 was unbelievable. 2018, the stock market struggled a little bit, but the economy really didn't. We kept adding jobs, and then we kept having a lot of positive things going on in the economy. And then so far, this first quarter of this year has been just absolutely phenomenal, both in the stock market as well as continued growth in the economy, continued signs of a good economy. His contention is that some retailers are getting overconfident in that strong economy. And as a result, they're inflating prices, and it's knocking down their sales. So let me expand on that. The gist of what he's saying is, a company like Nike is raising its prices and saying, everybody is doing so good. So many people have so much more money that we can raise our prices. We can do I don't know what the number is, but a 10, 15, 20% price increase on our products across the board. And the idea is, if you're selling 1,000 shoes at $100, and now you're selling 1,000 shoes at $110, you're going to make $1,000 more on that 1,000 shoes. You're going to sell the same 1,000. Excuse me. $10 more. You make $10,000 more. Let me make sure I get my math right. You're going to make $10,000 more on those same 1,000 shoes that you're selling, because you just on 1,000 shoes, you raise the price $10 on each one, so you bring in $10,000 more. The problem is that this increase in price, instead of still selling 1,000 shoes, you're only selling 700 shoes. And so now what you've lost is 300 times the entire $120 or $110. I'm going to do this on the calculator because I'm going to screw these numbers up. You sell 300 fewer shoes times that entire $110 now. You've just lost $33,000 instead of gaining that extra $10,000. So now you've made $10 more on 700 pair of shoes. So you're $7,000 better off. You lost $33,000 in volume of how many shoes you're selling. I'm making up numbers and being hypothetical with the numbers and probably getting my math a little bit wrong. That's the gist of it. What basically happened is Nike raised the price on a lot of its products. And as a result of the price increase, they sold fewer products. And that hurt them. The price increase hurt them more than it helped them. So that's basically why Nike missed. And they are from a percentage standpoint, they are by far and away the deepest drop in the Dow Jones today. They're down 4.5%, 4.6%. That's a $4 drop on the price of the stock. Now, put this in perspective. Nike a few days ago was at new all-time highs for the stock. They were hitting the highest price the stock had ever been. They're up 60% in the last year or 2 years. I think in the last year, Nike is up 60%. They've gone from the 60s up to almost $90 a share. A huge increase in the value and the price of that stock. They've had a phenomenal run. A little earnings miss, and that's what this is a little earnings miss. It does two things. Number one, obviously, it drags Nike stock down because people panic a little bit. And I think Nike's trading at 83, 87 right now. I'm going to tell you right now, if Nike gets down to 80, if in the next week of trading, Nike gets down to 80, 80 is going to be a strong buy for me for Nike. 80 would be a phenomenal place to get in and bolster a position or get into a new position on Nike. They're still an incredibly strong company. They dominate their industry, sportswear and athletic shoes. They absolutely dominate it. I disagree with their marketing, but it's very effective. I can't disagree with it from a number standpoint. I think choosing Colin Kaepernick as the spokesperson for Nike, that just was appalling to me. I just absolutely disgusting to me. But it worked. It was effective. It got them a lot of attention. They got a lot more press out of that. They got a lot more mileage out of that because of the controversy than any amount of advertising they paid for in that respect. So it was brilliant from a marketing standpoint. They lost some company loyalty. And I think ultimately they underestimated what it might cost them in product loyalty. I, for one, I own Nike shoes. I own some Nike running shorts and running pants, and I have Nike socks. There's a lot of you go around my home, there's a lot of Nike apparel in this house. The day they announced Colin Kaepernick was going to be the face of their advertising, there has not been one single purchase in my household for Nike products. I will not. So here's when I say I would buy Nike, I'm gonna admit freely I'm a little bit of a hypocrite. I may continue to invest in Nike stock because I look for deals in stocks. I look for value in stocks. I look for stocks that are going to make me money. My bottom line when I buy and sell stocks, when I trade options around stocks, is I'm looking to make money. Now, there are a few moral places where I draw the line. I don't support the tobacco companies. I think that's to me that's less of a consumer brand choice. Like I'm going to talk about more with Nike, and that's more of I have a moral objection to the use of tobacco. I don't hate you if you use it. I don't dislike you if you use it. I wish you wouldn't use it because it's bad for you. You could point to things that I do and say, hey, that's probably kind of bad for you and you shouldn't do it, but I do it anyway. So I'm not judging that what you do is worse than what I do. I'm just saying I am morally opposed to it, therefore I won't do it. I'm not morally opposed to tennis shoes. I'm not morally opposed to everything Nike. I am showing my dislike of what the company did by not purchasing any of their products until Colin Kaepernick is no longer a spokesperson. I think he is an unintelligent, screwed up human being. I really do. He is listening to people around him who are exploiting him and using him. Colin Kaepernick is not intelligent enough to go out on this crusade about police treatment of African Americans, and therefore it's appropriate to kneel during the national anthem. That was a stupid move on his part. That was an asinine move on his part. It's unpatriotic. It protests the wrong thing. You've got these celebrities and athletes that say, oh, we're not against the troops and we're not against the flag. We just want to protest during the national anthem because it will get us the most attention. What a load of crap. You can't have it both ways. If you're kneeling when that flag is present, you're against the flag, and screw you. Get out of this country. I'll buy you a one-way ticket to a country of your choice if you'll sign a document saying you will never step foot in the United States again. You don't like the country enough to do that, get the hell out. I'm passionate about that. That's just a load of crap. So don't give me this platitude and this BS about it's just a way to garner attention to a problem. There's other ways to do it, and there's better ways to do it than disrespecting this country, disrespecting the men and women who have fought and bled for this country, and disrespecting the only country that will let you do that without executing you for doing it. Such hypocrisy. Anyway, my stance on Nike is that, sorry, I get so worked up about stupidity and people doing moronic things like that. I would fight and give my life to protect your freedom to do it, but I'm going to tell you when I think you're a jackass for doing it. And Colin Kaepernick is a jackass for what he did, and everybody else that did it and followed suit with him is a jackass for doing it. So here's the thing. So back to Nike. When they get rid of Colin Kaepernick, I love their products. I love their quality. I don't hate the company. I think they made a really horrible decision in choosing Kaepernick for the spokesperson. When he's no longer affiliated with Nike on that level, if they want to continue to sponsor him, I'm fine. When they are no longer using him as a spokesperson for the company, I'll buy Nike products again. Simple as that. So I'm not asking anyone or telling anyone to boycott Nike. I think people going out and burning their Nike shoes and burning their Nike shirts and warm-up pants and stuff like that, I think that was really excessive. I think that was incredibly unnecessary for people to do that. But it's people's choice. They can do that if they want. I chose to stop buying their products. I own Nike stock. I'm going to continue to own Nike stock. I think if they hit $80 a share, they are going to be a phenomenal value, and I would buy more Nike stock. I'm just not going to support the company with my dollars in the sense of buying their products until they pull their heads out of their butts and do something smarter than what they did. So anyway, that's one of the big drags on the Dow. The Boeing saga continues. This is another. Boeing is down 1.7% today, another $6.50. The Boeing continues to get hit with bad news. The Ethiopian Airlines, I forget what the name of the actual airline is, it has an order of, I think, 49 or 50 Boeing 737 MAX airplanes. They're canceling those orders, or at least trying to cancel them. That's the news that's taking place today. It makes you wonder, and Boeing is under a lot of pressure because they've got, I think I heard they have something like 700, I wish I could remember the number, like 700 or 7,000. It's a lot. They have a lot of these aircraft, this particular style of aircraft on order. It makes up right now the bulk of what they have on order. And so with that in mind, if other countries or other airlines follow suit and cancel orders of this airplane, that could be a big major hit to Boeing. Not all of these airplanes have been paid for. It's not going to create a situation where Boeing is suddenly out of cash, where Boeing is filing bankruptcy. They lose a lot of their accounts receivable. They lose a lot of what is they lose a lot of future revenue, and they have to find ways to replace it. So the stock is under pressure again today. On the Dow 30, there are only a handful of companies, 5 or 6 companies, that are having a deeper percentage drop than Boeing. But because of how much Boeing is weighted towards the Dow, it's dragging the whole index down as much or more than Nike or JPM or Goldman Sachs. Caterpillar is in that mix as well, having an off day. Not sure what's bringing Caterpillar down other than just the sell-off and the fact that everything is tied into and attached to mutual funds and exchange-traded funds. And when one thing goes down, everything goes down. So those are 2 of the bigger drags. Now, From the last thing, and this might be as impactful right now on the markets today as anything. There is a correlation between the 10-year bond rate and the 3-month bond rate. So when you're buying T-bills from the Treasury bills from the U.S. Treasury as a way to invest short-term or long-term, basically in the strength of the dollar and the health of the United States economy. You have, at the time you purchase those T-bills, you have a guaranteed locked-in rate that's going to mature in a certain period of time. For the first time in a while, and I think the rate is right around, I want to say right around 2.7, but I might be off. I might be wrong on that number. But the important thing is not exactly where the rate is. The important thing is that the 10-year rate and the 3-month rate have basically come together and merged. Usually there is some separation between those rates, and sometimes they're going in different directions to suggest the shorter term and the longer term health of the economy, or at least the outlook of the economy. And a lot of people think of it as a recession indicator when these two yield curves merge together. It has in the past at times preceded a recession. But there are a lot of other things that are necessary to precede a recession that are not present in the current economy. And that is some weakness in underlying economic fundamentals. The only real weakness in economic fundamentals is that the rate of growth has slowed down. Growth has not stopped. We're not going backwards. We're not moving into recession territory. And we've even had some comment by the Fed and by some other so-called experts that there's no immediate fear of a recession on the horizon. Now that can change at any time. The failure to get a deal with China and an increase in tariffs as a result of that could certainly escalate things, and that could certainly be trouble for the medium term to longer term prognosis of the economy. But that hasn't happened yet. All indicators are we're going to get some kind of a deal. I trust the president in that he's not going to enter into a bad deal. He's going to be somewhere between the perfect deal for the U.S. and what he would consider a bad deal that he would walk away from. And if you keep it in those parameters where he's not going to a bad deal, but he's not getting the perfect deal, something in between is better than not having a deal with China. And I'm confident that that's going to happen and that that's going to be the case. So when that happens, I'm going to be optimistic and say when instead of if. When that happens, the reality is that we're probably going to get an even stronger economy, and I believe it's going to help the global economy. One of the biggest concerns right now is that there is significant slowing in the global economy, but again, it still hasn't turned negative. And people are sometimes reacting as though it has turned negative. You got to be really careful, and not very many people can do this. People get caught up in the hysteria of the headline that comes right now today. What is the headline today? And whatever headline happens today, I'm going to react to it. And that's dangerous, because what happens is good or bad, 90% of the time, it's an overreaction. It's an unnecessary overreaction. It's not necessary to be in this panic sell mode, because these yield curves have come together, but there are no other major big indicators on the horizon that suggest we're going into any kind of a recession period. The economy is strong. The economy is healthy. The Dow, the NASDAQ, the S&P, they've all got some legs to go up to those all-time highs that they hit back in late September, early October of last year. They all have the ability to get up there again soon, like within the next quarter, maybe not before the end of this month, because today's sell-off probably hurts that. At least it hurts it a little bit, but they all have the ability to get there early in next quarter, April or May. I can see easily those all-time highs being hit again. So be careful. Don't panic. Don't overreact to what's going on. The news is not all rosy. It's not going to be all rosy all the time. That's just the reality of the market. But you got to be careful not to overreact to what's going on. And I believe what's happening today, the sell-off today, is a combination of two things. It's some profit taking from a big move up yesterday, and it's an overreaction and a panic to all the hysteria around these yield curves, because that's really been the focus of conversation on the news this morning in the first hour that the market is open, and maybe in the hour leading up to the market being open. all the talking heads on the different financial news stations and different financial news websites were pointing to this 10-year and this 3-month yield curve and stoking the fire of the panic that could come from that. And that's really what it was. They were stoking the flames, pouring a little gas on it, saying, "Oh no, everyone's Chicken Little. The sky is falling all the time." And I feel kind of bad for those people that can never ever get out of that mode of the sky is falling. But news sensationalism and bad news sells way better than good news sells, and so don't expect that to change anytime soon. Don't be overly worried about today. Don't be panicked about today. It is not the end of the world. The sky is not falling. The economic outlook is bright. It's good. One last comment really quickly, and it's time to wrap up. Banks are under a little bit of pressure today, specifically Goldman Sachs and JP Morgan in the Dow, because there is talk that with this inverting yield curve and with the merger of these two yield curves, there is talk that the Fed could possibly cut a 0.25% rate. We've had all this worry about the Fed hiking rates, and then they said there'd be no more hikes in 2019. And now they're saying maybe only one hike in 2020, which they shouldn't have said. That is too far out to know. But now there is a suggestion that maybe to alleviate the concern of this yield curve, that the Fed actually cuts rates 0.25% or 0.5%. That's not good for banks. That damages the lending earning potential on lending money that banks have when the interest rates go down. So the banks are under pressure a little bit as well. You'd think the whole market would react to that as good news, but it's instead, because we're throwing gas on the fire, everything is bad news today, and it's got the markets down. A little over an hour into the trading day, Dow down 220, NASDAQ down 76, S&P down 25. All of them right in the neighborhood of 0.75% to 1% down. I don't expect it to improve much on the day. I think we could get back maybe to only 0.5% damage by the time the day is done. But don't panic about it. Don't worry about it. We're going to hear more news on getting closer to China trade talks wrapping up and being finalized, and that's going to push things up at the beginning of next week. Everybody has a great weekend. Thanks for joining. Bye.